Hello, I am your host, Paul Feinstone. Welcome to our 2-minute webinar. It's amazing how much you can learn in a minute or two. Today, we're going to talk about cost segregation. Cost segregation is a way to accelerate the depreciation on both commercial and multi-unit residential buildings. We can classify a building in more than one way. Typically, the standard accountant will use a 39.5-year depreciation schedule and will depreciate your building 1/39th each and every year. However, it is possible to accelerate that significantly. In the IRS code, there are 2 additional personal property categories, and a lot of the building envelope and interior systems can be reclassified. Those 2 reclassification schedules run on 7 years and on 15 years. So if you bought a $10 million building 5 to 10 years ago, you have tremendous depreciation that you can pick up as part of a cost segregation study. People say, well, how can you reclassify a building? Well, actually, it's pretty easy. Anything that's installed in the building, that can be removed. Railings that are on the interior or exterior of the building, HVAC systems, wiring runs that are portable, removable sprinkler systems, all kinds of property that forms part of that building can fall into one of the other 2 personal property categories. And when we do that, we can accelerate your depreciation to the end of the period, to the current period, and we have generated hundreds of thousands to millions in tax credits on a regular basis. If you own commercial or multi-unit residential buildings, and you haven't done a cost segregation study, this is a wonderful technique, and it can put a lot of money onto the bottom line for any particular project or perhaps for buying another building. The only thing you have to really be careful of is if you sell the building within 2 years of the study, the IRS may come back and recapture the credit. Isn't this fun? A very large paycheck from your own property. Thanks very much.